degree in accounting and a master's degree in accounting and finance. He's an associate of the Chartered Institute of Taxation of Nigeria and part qualified Chartered Institution of Management Accounts, management accountant. Ayub is passionate about helping clients navigate the complexity of tax and finance, providing them with peace of mind and financial clarity. With a commitment to excel, he has a proven track record of optimizing tax positions, reducing liabilities, and ensuring regulatory adherence. In addition, Ayub is the founder of Youth Innovations Empowerment and Leadership Development, YIELD, a non-profit agency providing and developing human minds through mentoring and organizing development programs in Nigeria. So without further ado, I would like to bring on board our first facilitator, Ayub Olagewaju, as a, take us through, the concept that we are currently having today. All right, so thank you very much. Are you currently yeah? You could actually say I. Very good. All right, perfect. So thank you for joining. All right, so over to you. Over to you.
Good afternoon, everyone. Thank you for joining this webinar, and I would like to share this topic on efficient tax record keeping and documentation. So I will try my possible best to make this webinar interactive, right? And then the second speaker, which is Richard Okola, we then summarize the whole thing. If you are a business owner or you are willing to start up a business, or probably in future you want to start up something, this webinar is for you, because at one point in life, definitely you will become a business owner, and then you understand what record keeping and documentation is all about. But this webinar is basically for tax purposes. Like the title is efficient tax record keeping and documentation. So I'll go ahead and then just quickly discuss a few points and then explain the best practices for physical and digital record keeping, and as well the tools and software we can use for for tax record keeping. And so my introduction, as a business owner, or probably as a professional accountant, or probably a tax consultant, or a tax specialist, or probably a graduate trainee that is willing to go into accounting industry or auditing or tax. So record keeping is very, very, very vital, and it is very, very important, very significant if you find yourself in a particular company or in a conglomerate where you work as an accountant or as a tax person. So efficient tax record keeping is actually essential for accurate tax reporting, reducing errors, avoiding penalties, and maintaining compliance with tax regulations. So if, for example, now you own a what's it called now? You own a business, right? And then, sorry, I'm just gonna put on my video now so you can see who is talking to you. So don't be like can you all see me? Hello?
Yes, we can see you. We can see you.
All right. So if you own a business, right, and you have employees working for you in specifically for finance unit or department, right? It's very, very important for these guys in finance departments to make sure that record keeping is very, very, very essential, right? Because it can save you significant time when filing your tax return and potentially reduce your tax liability by keeping your records, right? So then additionally, it proves invaluable if the tax authorities actually have any questions in future, probably to require further information regarding your annual returns, regarding compliance, regarding and other things that deals with what's it called, with record keeping. So, and we need to also ask ourselves, why is record keeping? What is record keeping, and why is it important? So if I own a business, or if you own a business, right, why is record keeping important? Why is it important? What is record keeping, and why is it important? The first thing is Record keeping is actually a process of storing, maintaining, organizing records, both digitally and physically for easy access and security, right? If, for example, now you own a business in future, right? And then let's say, for example, now what you do is you have a small and medium enterprises. So basically your nature of business is construction, right? So you construct a lot of things, and you have a finance department whereby you have customers, you have suppliers, you have these guys that as well do a lot of things for you, right? So definitely you need to like keep the record of your customers, you need to keep the record of your suppliers, right? To make sure that you know the kind of services you render to your customers, you know the kind of services you render to your suppliers. So basically it is a process of storing, maintaining, and organizing records, both digital and physical, for easy access and security. So a good example is OOA Consulting, right? So OOA Consulting has several clients that we render services to. We have clients in financial institutions, we have clients in telecommunications, we have clients in agro-allied, which is also known as agriculture. We have clients in FMCG, which is known as fast-moving consumable goods, right? So all these clients that we render services to, they are our customers, right? So what we do basically is, from our own hand, we take good care of our record keeping for tax purposes. The reason for this is compliance, right? And why is it important? It's important because of compliance, to help meet legal obligations and avoid penalties when the tax authority comes, right? Then the second thing is audit readiness. So that's what we call statutory audit. This normally happens every year, right? So whereby we then bring in external auditors to come and check our books, right? So if we do not put a good record keeping in place, we can't achieve this, because when the auditors come, they come with a lot of document requests, right? So we normally make sure to organize records. So here's the audit process. So what we normally do is we keep our books in place to make sure that when the external auditors come, right, it will ease them during the audit process. Then also for efficient tax filing, So if you look at it very well, in Nigeria, right, the tax authority in Nigeria is called FRS, which is known as Federal Inland Revenue Service. And we also have the people we call SRS, which is known as State Inland Revenue Service, right? So, and I want to believe everyone in this meeting are professionals, right? So probably you are aspiring to be a professional accountant, or you are current professional accountants, right? So one of the things that record keeping does is to streamline preparation and submission of your return, right? So because you file returns every month to what's it called, to FRS, and then we also file returns as well to State Inland Revenue Service. So I will just quickly run through my points then, because I don't want to waste much of our time, right? I want to make sure we stick to the time. So what are the records you should keep as a professional accountant, or probably as a professional tax consultant, or as a finance person, or probably you are a graduate trainee in this webinar, right? And you feel like, oh, I want to go into finance, and this webinar is going to impact me one way or the other. So if peradventure you find yourself in that kind of scenario in future, what are the records you should keep, right? So you should keep records and documents that you have received from your suppliers, from your customers, from anyone that, oh yeah, they work in hand with what's it called, with the organization that you work for, right? So you should keep any records and documents that you have received or prepared that will be used to complete entries, right? When it comes to your self-assessment returns to tax authority, or probably the kind of claim you want to claim when it comes to allowances, right? So most of these records will be from your tax year, or probably your accounting year, if you understand what I mean, right? So because during your accounting year from January to December, this is subject to what's it called, the company policy. Some might say, oh, my accounting year is January to December. Some might say probably from another 12 months period. So most of the records will be from tax year or accounting year to which they relate, or soon afterwards, right? So, but however, you will sometimes need to refer to records that are already several years old. So I will just quickly take you to use a good example is so if, for example, now the tax authority, for example, like I said, FRS or SRS want to come and audit your company, right? What they normally do is they normally send a letter to audit notice letter to what's it called to this client in different industries, right? To and then say to you, they want to come and do audits. So these audits can probably cover like 4 or 5 years. So if you don't keep your financial records, right, for these 5 years, right, definitely is going to result to something else. So if, for example, you dispose an asset that you have owned for a long year, right, for a long time, right, and then they come for audits and probably subsequently into 3 years' time, and they requested for this document that you use to dispose your asset, and you can't find it again, it's going to result to probably something else, a huge liability or probably additional penalty, right? So the need to refer to old records can arise in other circumstances. So we have to bear this in mind. We have to bear this in mind. So then this leads me to, right, if I am a financial accountant or probably I am an auditor or I work in finance, I work in tax industry, or even if you're a tech person, right, you might probably have a friend that does finance too, and you're in this webinar, you can as well share this with the person, right? So what happens if we don't, or if I don't keep adequate records? What happens, right? Because don't forget that this webinar is for tax purposes. The topic is efficient tax record keeping and documentation, right? So I'll be talking in the aspect of tax, right? So if what happens if I don't keep adequate record? So I own a business. If I own Dangote, right, and Dangote is a conglomerate business, it is a very large corporation, right? So if I own Dangote and I don't keep my record, I don't make sure I put my records in place, right? I don't put my books in place. What happens if I don't keep adequate record? So if the tax authority needs to check your tax return because for any reason, right, in future or probably when you start your business and you're unable to show the records that you use to complete your return, you may have to pay additional penalty, right? Or probably the tax authority might come up with what we call BOJ. We call it best of judgment, right? So what best of judgment simply means is it is a tax assessment procedure conducted by tax authorities on the account of a business owner or of a particular company, right? So it is usually done where the taxpayer does not provide any documents at all listed in the audit notice letter. So this is what I'm trying to say, right? So if you are here and you work in a particular organization, right, or probably you aspire to own a business in future, and then you don't put your records in place. Imagine tax authority coming to your company to come and check your books, to come and audit your books, and they served you a long list of documents, and you're unable to provide any document to these guys, right? So what the tax law says is they are going to come up with what we call best of judgment, right? So that best of judgment will then that's basically for tax authority to come up with a kind of tax liability for this company or for this business, and then you have to pay because you do not put a good record keeping in place. So what I'm just trying to say is it is very, very important and significant for us to put our books in place. So I'll just quickly run you through the kind of examples of the types of records you will need to keep. So if you are here, you work in the finance department, right, of a particular organization, or probably you work as an auditor, as a financial accountant, as a tax specialist, in finance generally, right? Or probably you inspired to own your own business in future, right? So this webinar actually have a good positive impact on you. So the kind of record you should keep, right, are management accounts, audited financial statements, source documents. So what I mean by audited financial statement is so basically, if you have a company, you are meant to have audited financial statement because this shows what we call your income statement, your balance sheet, your cash flow statement, your changes in equity, right? So a lot of what's it called, components of accounts, right, that your audited financial statement will show, right? Then source document, it is very, very important. So what I mean by source document is your voucher, right? Your receipt, your payment voucher, right? Your receipt. For example, now your company probably acquire what we call fixed asset, right? So that fixed asset definitely is going to come with a receipt, right? So this is very, very important because it is from this receipt they then transfer the figure to what we call general ledger. So what I'm trying to say is this: all the figures in your general ledger are coming from somewhere. So if you're a finance person, right, or probably a certain accountant, right, I'm pretty sure you know what we call general ledger. Then probably you don't know what we call general ledger. After the meeting, you can as well ask any questions if you want to ask. If you have any questions to ask. So general ledger, all the figures in your general ledger, or probably all the values in your general ledger are coming from somewhere. All the values or all the figures, that all the entries in general ledger are not fabricated, right? So they are actually coming from somewhere. Where are they coming from? They are coming from your source documents, right? So the what's it called now? The invoice you give to your customer is called source document. So if, for example, now I own Dangote, right? Don't mind me, I love Dangote so much because he's the richest man in Africa, right? So if I'm correct. So if Dangote now, sorry, can you hear me at all? I need to be sure because I've been talking since.
Yeah, you can hear you.
All right, so fine, very good.
Yes, you can hear you.
All right, very good. So if Dangote is meant to supply a 10 bags of cement to someone in Kenya, right? Because this guy renders service to a lot of people in Africa, right? So then definitely that 10 bag of cement is going alongside with Dangote invoice to that particular customer, right? So it is this invoice, right? It is the value on that invoice that you're going to enter into your general ledger. Right. So what I'm just trying to say is all the entries of general ledger is coming from source documents. So source document is very, very, very important for us to keep if you own a business or probably you work in a finance department, right? So then trial balances, right? Trial balances, extended trial balances, these are documents we need to what's it called? We need to keep, right? So then audited adjustment journals, fixed asset register, tax computations, our bank statements, input VAT claim, right? So what I mean by input VAT claim is if you acquire a fixed asset, right? So from a particular supplier, so the supplier is going to charge you what we call VAT input. It is very, very, very important to keep this because at the end of the month, right, you want to make sure you have your VAT input, you have your VAT output, and then you pay the right VAT liability to the tax authority, right? Because this is very, very important. Then you have to make sure you have a good record keeping of your VAT returns, company income tax returns, self-assessment, withholding tax returns, and then probably relevant schedules you have during your accounting year. So these are records you will need to keep as a financial accountant or as a finance person generally, right? If you find yourself working in an organization, right? So let me just quickly then run through the best practices for digital and physical tax record keeping. So how can we make sure we have a good record keeping? What can we put in place? What kind of things can we put in place to as well assist us to have a good record keeping? Number one is organization, right? So we have to be consistent. There's this method that we normally use, right? In practice, naming of files and folders, and then store related documents together. Then if it warrants for us to separate ongoing work from the completed work and avoid overfiling folders, right? So you have to organize all your record. If, for example, now you file VAT return for the month of January, it's good for you to have a folder, right, for this month. Okay, this is the month of January, right? So this document here is for the month of January VAT returns. So what are you doing? You are organizing all these documents. So it's part of the record keeping. It's very, very important. Then digitizing physical copies can help preserve them and then reduce risks of damage from physical handling, right? Then you have what we call access control, right? So this is very, very important because most times in organizations, right, you have a lot of people having access to different, having access to what's it called, documents, right? But if you can protect sensitive data by restricting access to only those who need it. If, for example, now you work as an account receivable in finance team, right? Definitely you are in charge of debtors because that's what account receivable means, right? You make sure you collect what's it called or the money your debtors are owing you for a particular period, right? So that means you should be the one, or probably you and your team, that should have access to anything account receivables for your organization. The record management, effective record management can help save costs and streamline business processes. Then consistency. You have to be consistent when it comes to record keeping. Or if, for example, now you perfected your record keeping for the month of January, right? We are meant to be consistent in the month of February, in the month of March, in the month of April. So till 12-month accounting period, right? It is very, very important for us to be consistent. Then tools and software for automating tax documentation and record keeping. This part is very, very, very important because we are in the age of this dispensation. We're in the age of technology, right? So it's very, very important for us to know the kind of tools to use and to know the kind of software, right, to use when it comes to tax documentation and record keeping. And I want to believe all the tools I will be mentioning now, I want to believe everyone in this webinar is familiar with it. We might not have probably used them in our organization or probably as an individual, right? But I want to believe it is something every one of us in this webinar are very, very, very familiar with. So, the first thing I will mention is tax pro max, right? Because at the federal level, if you understand what I'm saying, in Nigeria, taxation is decentralized. What I mean by that is we have them at the state level, we have them at the federal level, we even have them at the local level. You understand what I mean? So at the state level, right, we have the kind of taxes we pay at the state level. For example, business premises, PAYE, development levy, right, withholding tax, right? Then at the federal level, the taxes we pay is value-added tax, withholding tax, company income tax, capital gain tax, and then a lot of taxes are paid at the federal level too, right? So, but what I'm just trying to say is the tax authority actually came up with a good idea a few years ago, right? So, and it is called Tax Pro Max. This is software that actually help in terms of compliance and filing returns for all companies, all businesses in Nigeria, right? So the Federal Inland Revenue Services came up with Tax Pro Max. So it's an online tax administration platform launched by, hello, please, can you mute yourself, please? So it's actually an online platform launched by Nigeria's Federal Inland Revenue Service to simplify and automate tax processes. So the essence of Tax Pro Max as a platform is to centralize tax filing and payment system, automation of tax administration, and then taxpayer self-services and real-time assessment. So that's at the federal level. I also want to believe at the state level too, which is what we know as SIRS, State Inland Revenue Service, right? They also have what we call e-tax, right? E-tax platform where you can actually access this e-tax platform and then do anything you want to do on that e-tax platform. So it is very, very important for us to get to know all these things. Then the software tools for automation, right? So the number one on my list is SAP, System Application Product, right? What I mean by SAP is, so SAP is an ERP system, right, that is used for businesses to stay, what's it called now, to stay in terms of record keeping, right? It has as well helped businesses to put a lot of good things in place, right? So it has different modules, right? But as a finance person, what you should be concerned about is actually SAP FICO, finance and controlling, because sometimes if you work in a finance department, it's not important for you to know all the modules. I want to believe the only module you should know, right, as a finance person is just the SAP FICO, right? So then we have Sage Business Cloud, we have Xero, we have QuickBooks. So what I would do is there is this if you are interested in for example, let's say SAP FICO, I'm going to drop a link on the comment section. You can as well click on that link and then take yourself through a personal training, right, when it comes, for this software, right? So you're not paying anything, you're not making any payments. It's just for you to get yourself familiar with what we call system application product. It is an ERP system, right? So I will drop the link on the comment section after this meeting. right? So then what are the benefits of automating tax documentation? Time savings, improved accuracy, enhanced compliance, streamlined audit processes. Then I will then conclude because I need Richard to also come in and then probably summarize the whole thing. So it is very, very important to keep accurate, secure, and organized tax record, both physical and then digital, because it helps when it comes to compliance. It helps when it comes to your tax filing, right? It also helps when it comes to our statutory audits. Then automation is as well transforming tax documentation, right? Because nobody keeps physical records anymore. What people do now is they digitize everything. So automation is transforming tax documentation and then record keeping. Then investing in the right tools can as well help us, can also lead us to cost savings. If, for example, you have the software I mentioned earlier, SAP. If, for example, in future you have a business, right, and you use one of the software that I mentioned earlier, Zero, QuickBooks, or SAP, right? It will help you to save cost, right? And also it will help you to put a good internal control system in place whereby you can as well make sure everything in terms of operations is going in the right way. Then it also helps in greater compliance. And at the end of the day, it's going to give you a peace of mind as a business owner or probably as a finance person working in an organization. So that is it for now. I will drop the link on the comment section now for SAP FICO. If you're interested, you can just click on that link and then probably take yourself through a personal development. It should probably take you for, let's say, max the next 2 months, right? Or probably 3 months. You should be in the next 1 month, if you have time, just take yourself through a personal. Please mute yourself, please. That's all for now. Emmanuel, over to you. Over to Emmanuel. Thank you very much. Thank you.
All right, thank you very much, Olariwaju, for that wonderful insight you shared on tax. I hope you guys took notes. Not to worry, someone who asked that the recording will actually be available to you. So far you registered, you will get the recording once we're done. All right, so thank you, Olariwaju. All right, without further ado, we'll need to bring on board our next facilitator. So I'll just read through his biography, right? Then I'll share my screen shortly. Give me a second while I share my screen and walk you through his profile. Okay. In it. All right. So you could definitely see my screen right now. Okay. So our next facilitator is Richard Okunola. So Richard Okunola is a seasoned professional with extensive and diverse work experience in accounting, tax, finance, and global compliance and reporting. He's an associate of the Institute of Chartered Accountants of Nigeria, the Chartered Institute of Taxation of Nigeria, the Accounting Technician Scheme of West Africa, the Chartered Institute of Management Accounts, United Kingdom, the American Institute of Certified Public Accountant, and a CFA Investment Foundation certified holder. Richard is known for his outstanding work performance, including Standout Talent Award from KPMG and recognition from various professional bodies, including the District Society of the Institute of Chartered Accountants of Nigeria, the Young Professionals and Emerging Leader, the Iconic Brand Awards, to mention a few. He was also a member of the Tax Technical Desk while at EY in Nigeria. In addition to his professional pursuit, Richard is a co-founder of Mentorship Corner International, a community that focuses on empowering young accountants in their professional life, academic, finance, technology adaptation, soft skill acquisition, and personal development. The committee has grown to 300 members in more than 10 countries. All right, without further ado, I'd like us to welcome Richard Okunola as he takes the plan. Over to you, Richard. Hi, Richard. Can you hear me?
Hello, yeah, I can hear you. Thank you very much. Thank you for the introduction, and welcome everybody to the call. So, okay, can you enable me to share my screen?
Okay, a second. You could try share your screen now.
Okay, it's still showing that sharing is not turned on. I think you have to make me co-host or yeah.
Okay, just give me a second. Let me see if I can. All right, you could try that now.
Okay, so let me see. Yeah, fantastic. So let me share my screen. All right, can you guys confirm you can see my screen now?
Not yet. You come. Yes, it's coming up now. Yes, we can see your screen now.
Okay, fantastic. Yeah, thank you very much. It's a great privilege to be here, and thank you, Emmviron and OOA for organizing this session. Interestingly, I shared a case study recently that's kind of aligned with this topic, and I think I'll be talking about the case study later in this presentation. So, but the main purpose of this presentation is ideally to kind of buttress what my colleague has said, that is Mr. Olushola, right? What he has said before, and then also to introduce some other aspects that, of course, covers my own part of the discussion. So without wasting much time, I'll just quickly go to the next presentation. So this is the agenda for this session I'm facilitating. And I have just about 35 minutes, 30 to 35 minutes to cover it. So by the end of this training, participants should be able to understand the key benefits of maintaining accurate and, of course, organized tax records for compliance purpose, right? Then also you'll be able to apply methods. Of course, I'm going to be teaching you some practical methods, right, for organizing and maintaining your tax records. Then also including, of course, identify the stages of tax audit. So these are the part of the thing we want to talk about too. We want to look at how you can manage tax audits, right? Then leverage available tools such as accounting softwares, like my colleague has said. And then, of course, finally, we kind of summarize it with a case study that also talks about encouraging regular reviews and update of your practices. So yeah, introduction, this one is basically what I've just said. We're going to be looking at different aspects of the record keeping, but I've also tried to streamline it purposely for tax so that I don't go too broad, right? Now, importance of maintaining accurate and organized tax records. So the importance of maintaining accurate and organized tax records. Please, at any point that you cannot hear me, because I'm using only one device, so I'm not able to know if you can hear me, but maybe you guys can call me at any point you can hear me, right? So, quickly, importance of maintaining accurate and organized tax record. So I've highlighted a few points here. One is to ensure compliance with tax law, right? The tax law requires that you keep your documents. In fact, it is recommended that you have what we call a document retention policy in your organization, where you have to keep all transaction documents for at least a minimum of 6 years. For internal control purpose, I think there's a global practice that says a minimum of 7 years. Some companies will say a minimum of 5 years, but at least try to keep your accounting information for a minimum of 6 years, so that anytime you want to make reference to it, you can always go back to that 6 years and then take it for tax audit purpose or any other purpose in the future. That's what the law recommends. So,
it helps you to comply with the tax law requirements, right? And then avoid unintentional violation of these laws. Number two, helps to facilitate accurate tax filing. So when you have your tax information well organized, right, there's a way it kind of streamline your tax filing processes and ensure that all necessary documents are accessible. For example, for those that are into importation, right, especially people that claim huge input VAT, you'll notice that sometimes you cannot claim your input VAT because the law says that it is only the portion that has been utilized that you can claim. So it's now on you to identify what are the supporting documents for the portion that has been utilized. Do I have them in place? If FRS call for it and say, okay, can you provide those? Can you give it? Can you be able to quickly allocate or find that document as required? Right? So this, if you can't find them, of course, you pose the risk of resulting into costly tax audits, or in fact, not even being able to claim such input VATs. Then we have help in minimizing deduction on credit, of course. So it's maximizing deduction on credits. When you're able to claim, when you're able to find those supporting documents, of course, you can use it to claim your credits as necessary, whether your input credit, whether your VAT refund, or even to claim zero-rated transactions, right? That you have already inputted it on your system, but it's zero-rated, but FRS is saying that you have to pay VAT on it. So you can easily justify all those kind of transactions because you have the supporting documents. Then also provides essential documentation during audit. So we're still going to talk about this at length, but of course, part of the reason why you need to maintain accurate and organized tax record is for you to be able to easily, right, point to those documents as supporting documents, as evidence to support your income and deductions during tax audit investigation or desk review exercise. So, and then finally, to protect against tax-related penalties, I don't need to talk too much about this. When we get to the tax audit aspect, we can even look at it more. But in simple terms, it just helps you to minimize the risk of exposure by not having the supporting document that can help you to claim deductible expenses, right? So now, how to maintain good record keeping for tax purpose. So I have said, I don't want to replicate exactly what my colleague has said because he has actually talked about it at length. So I'm just going to be focusing on the more practical aspect, right, in our discussion. I'm also going to be giving us a live demonstration of how to save your folders, how to keep it organized and stuff like that. So number one is to ensure that all transactions are properly recorded with the corresponding supporting document, right? I know that in accounting, we say that for every debit entry, there must be a corresponding credit entry. But don't forget that the initial debit entry that you posted has a supporting document. So the corresponding credit entry, you might not necessarily need a supporting document, but in other cases, you might also need supporting document. What do I mean? For example, a customer paid you. For a customer to pay you, you must have initiated a document which is called the invoice, right? And then the invoice is what you now use as your initial posting document, which you must have. Now that your invoice is expected that you have stuff like invoice number, invoice date, transaction details, right? Breakdown, the TIN, tax identification number on your invoice. Now, when your customer makes payment, it's either they tell you by confirmation, maybe via email, via evidence of payment or something to just show you that they've paid, right? That is the second supporting document that shows that payment has been made. Or worst case scenario, you go to your bank statement that shows that payment was made to you. So those two entries, when you are posting them, it's expected that you have corresponding documents to support it, right? While you might not need to keep supporting document for payments, well, maybe it is clearly traceable to the bank statement, at least you need to keep supporting document for your invoicing. So let's move on. I'll be very fast. So number two, invest in reliable accounting software that automates record keeping process. So this one is very important. To many people underestimate the purpose of ERP, maybe because it's expensive. I understand, but trust me, there is a way ERP comes through for you when you are having backlog of exercise of like tax audit duty, tax audits, and even statutory audits, right? When you need to get a document, and because of sophisticated ERP system like SAP, for example, like my colleague has said, SAP allows you to be able to save not only your transaction invoice, even supplier invoices, supporting documents, your PO that you use to initiate the transaction, GRN or service entry sheets, depending on the industry, you can save all these things on the ERP system. So that when you are opening a transaction, you say, oh, this transaction is not taxable, or let's say this transaction is tax deductible. and FRS is saying, or the tax authority is saying, no, it's not. You can just double click on transaction, open it, call for the documents and supporting documents. You don't need to go and be looking for it in your archive, right? So you can easily spool those documents. Some other ERPs like Xero, QuickBooks, Sage, they also have those features. Maybe not all of them, but some of them have those features too, where you can also upload the supporting documents alongside the transaction posting. Then number 3, create and maintain a systemic filing calendar to track of filing deadlines. So what I mean there is that to keep track, you must make sure that you have a consistent calendar. For example, I have a couple of clients that I provide services for in Nigeria. What I just told them to do is that, okay, sir, that's the MD now. I told the MD, I know your team are very busy, but on the 15th of every month, we want to make sure that we have filed your VAT returns. So what I do is that on the 1st of every month, my team send out an email to tell them that, oh, your VAT returns for this month is due on the 21st. We need you to provide all the documents for us to enable for us to be able to compute your VAT returns and be able to file it accordingly. And they provide it, right? So that on the 15th of every month, they can tick it up on their calendar that they filed it. So you must also have that calendar in your office. Oh, VAT, pay, pension remittance, NHF remittance, and all those kind of remittance. Have a schedule and tracker, right, in your office where you can use to monitor it. And if you are a business owner, you can have that as a personal something that you can also keep for yourself and say, oh, I know my team would have done it, but let me also be following up. Guys, have you filed your VAT returns? Have you filed it? So that way you can be able to be on top of your game, even as the business owner. Next is to keep tax filing records in multiple locations. So I advise this to many clients, especially those that rely on the government provided channels, like what we have now is Tax Pro Max. Currently, many people do not keep record of their withholding tax credit. They just believe that everything is on Tax Pro Max. But trust me, what if anything happens tomorrow now, and then the Tax Pro Max, they say the portal failed, or let's say a new government comes. Okay, so sorry, let me quickly, I heard that some people want to join. Let me admit everybody. All right, I've admitted everybody. Allow mute all. So just a minute, let me try to make someone the co-host. I need to make somebody the co-host. Just a minute, guys. Apologies. Okay, so please, can you confirm Emmanuel is the co-host? Emmanuel, can you confirm that you're the co-host? So I'll make you the co-host so you can admit other people.
Okay.
So are you the one, right? Okay, Emmviron company. Sorry. Sorry, apologies for that, guys. Oh, that's the way this thing is. Anyways, I'll just unmute. I'll ask Emmanuel to. Emmanuel, can you hear me?
Yeah, I can hear loud and clear. I think you can continue.
Okay, I can continue. All right. I just want to be sure that we are good.
Yeah, we're good.
Thank you. So yeah, sorry guys, apologies for that. So we keep filing records. Like I was saying that we can't 100% rely on the government provided channel for saving your documents. For example, people's tax credits now, Tax Pro Max is where you can see your tax credit, withholding tax credit. It's important that once in a while, go to Tax Pro Max, copy those withholding tax credits, both details, reference number, and everything, copy it and transfer to an Excel file, right? It's for your own safeguard, so that in case tomorrow the portal changes, the government changes, and a new person said they want to introduce Tax Pro Max Pro again, and then they said they will abandon the former portal, automatically you might have to lose all the document or all the information you have on that portal. So once in a while, make sure you keep record of them. Then also the filings you have done, I believe you should be able to log into your Tax Pro Max and save those files too. You can actually save them. When you log in, save the filings. Just like we have the VAT form 002, which signifies your VAT filing before now, right? We also still have it on Tax Pro Max. Just go to that return that you have filed, go to concluded returns, and then Control P, then save it as PDF. That's all, it's good to go, right? So next item, part of our time now, we have maintain a particular, I'm still going to give us a demonstration of how to organize your files, right? Maintain a particular bank account for all tax payments. This one is very important too. Not many people do this, but trust me, if you're a big company or your company is becoming big, it's very good. I saw it in a particular company and it's really saved us a lot of stress when we're doing tax audit, right? So what they did is that even if they need to pay 20 naira, they will first transfer the money from the main account to that particular account. Then it's from that account that they will now pay to the FIRS account or whatever Tax Pro Max payment they want to make. And what that means is that all payment they made to the government can be traced on that account. So even if you don't have supporting documents, you can easily print that bank statement and say, oh, see, this payment went to the FIRS. This payment went to the LIRS. So you can also try to introduce that in your organization, keeping a particular bank account for all tax payments. Then also review vendors and customers' details to ensure that taxes are remitted to appropriate authorities. So a client was supposed to pay VAT withholding tax to me, but the client went to remit the withholding tax to FIRS. My company is an individual that is limited, not a limited liability company, it's an enterprise, it's a partnership business. The person is supposed to remit to the State Internal Revenue Service in line with the requirement of the law. But because, of course, the person did not know, the person just said, we want to help you to remit your withholding tax. The person went to remit it to FIRS. Automatically, it's a mismatch. And according to the law, it's not recorded that you have paid my withholding tax. You've only just dashed that money away to the FIRS. Well, under a same claim, right, you could have been able to recover that money back. But of course, you know the kind of environment we have. Then if any money you pay to the government, just almost, let me say, forget about it. So moving on, let me see. Are there other people waiting again? Okay, nobody's waiting at the moment. So moving on, we have regular review of your financial statement. That is trial balance and ledger. Make sure you consistently reconcile them, especially when you are preparing for an audit. Make sure you reconcile everything. They must tie. If there is any reason why your trial balance and your GL is not tying, or your trial balance and your final AFS, audited financial statement, if they are not tying, there's a need for you to carefully review it so that you can identify what is causing it not to tie. And if it is something like audit adjustment, exactly, just identify it and put it on a particular worksheet and say, oh, this is the reason, this is the variance, and this is the reason why they are not tying. Easily, you solve your problem. You don't have to wait till FRS now start giving you issues that this thing is not tying, then you now start explaining, oh, sorry, you didn't check it before, right? If possible, also check your mapped TB. Make sure that it is properly mapped. Now, we also have make sure to separate personal expenses from business expenses. This is very important also. Many businesses, especially businesses that are owned by individual, but they register as a limited liability company. Of course, many of them are like that, where the MD needs to go to somewhere and then say, just credit my account, pay to my driver to buy fuel in the car. Any business expense that is clearly for the business, please let it be for the business. Anyone that is for the owner of the business, let it go to the loan of directors, so that if they need to reconcile it, they will know that this money is not business expense, but is a loan to the director, right? Or if at all they need to spend money from the business account and it's not allowable expense, you know that you are ready to disallow that item during your tax computation. So use proper transaction description to avoid unnecessary tax exposure too. So this one is very important. So don't go and be writing PR. What is PR? Public relations. Is it CSR? Is it to approved donation that you're giving it to, right? So all those things, they are very important for you to watch out for during your when you're doing your account preparation and record keeping. So next slide now. Okay, I think this slide is jumping. I think we've covered this. Okay, so how to maintain good record keeping for tax purpose. This is just an example. So I'll go to another screen now. I'll stop sharing now. Let me see if I can switch screen. I think this share. So can you guys see my screen? Somebody should just confirm that you can see I'm sharing a CIT folder, payee folder, VAT folder screen.
Yeah,
Can
I
you see
can
that?
see.
Yes, we can.
Fantastic. So I just created this in less than 15 or 20 minutes ago. What I just try to achieve here is that let's assume that this is your office laptop, right? On your office laptop, go to under document, create a folder called tax folder. Under that tax folder, you can now create different folders. This one is for CIT, this one is for payee, this one is for VAT, this one is for WST, add more. WST, CGT, right? Now, after creating all this folder, the next thing you want to do is to open in each folder, for example, CIT, open it. Okay, 2022 YOA account. Inside this folder, even though I don't have anything saved there, inside this folder, you can save your 2022 YOA tax computation, save it there. Save the audited account that was filed, save it there. Save the CIT returns that was submitted on tax program, save it there. Evidence of payment, save it there, then go back. So that means in this folder, you have everything that pertains to a particular year of assessment organized in one folder. So if they say 2022, you did not pay your tax, you don't need to stress yourself, just go to CIT, go to a particular year, open it, show them evidence of payment, show them evidence of filing. Do the same thing for other years too, right? That's how to keep a proper record of accounting and for tax purpose. Now, for payee, I created a folder for payee also. Under my payee, have monthly payee schedule. 01 January, 02 February, 03 March. Do the same thing. Don't let everything just be scattered in your folder. Now, when you have done this, for people that are into consulting, you can do this for different clients. You just have a client folder one. Maybe let's say ABC Nigeria Limited. Under ABC Nigeria Limited, you have VAT, CIT, just like we have these folders. You have it like that for each client. You now save those transaction details per the folder to each client. So for this payee now, maybe the other thing I could have done here is to also make sure that, let me go back one step. I could have just done like this, 2024, so that anybody that open it will know that, okay, yeah, this is 2024 files. I'll move it here. So if I go to under payee, open 2024, I'll see all the files up to date. Now go back again for VAT, right? I have my VAT. The reason why I have folder for VAT is because I might have VAT input, VAT output. I might have VAT payment receipt. I might have some supporting document for my input VAT that is huge, right? Or some schedules. So I created the folder for each of them. VAT, January, February, March. This one too, I can do the same thing. Put it for the year and say, okay, this is 2024. Let me do 2024. So that anybody that sees this folder, not just seeing VAT, when they see inside the VAT, they know that, okay, this is 2024 January to date. So do the same thing for other tax types, right? Withholding tax, FIRS and LIRS, you see it. Under FIRS, even if you pay 3 times in a year, go there, put everything there, put the evidence of payment there. That is how to stay organized, right? So that everything is not just flying up and down on your system. You are now searching for it and looking for it. You can easily go down and say, okay, if they say, Richard, can you give me the payee schedule for June 2024? I just go here, go to 2024, and then click on my payee for June. Simple. So that's one of the steps. I'm just giving us a practical demonstration. So let me go back to my screen that I'm presenting. Just a minute. Where is it? Okay. Share screen. Unless I can't see my screen again. Let me stop sharing and stop share. Okay, 1 minute. Okay. All right, so just confirm you can see my screen now. Somebody should.
Yeah.
Okay, great. So imagine what we have just achieved now. That's how to organize your file, stay organized. So moving on to the next one. Let me see. Some people are in the waiting room. Let me admit them in. Okay, nobody else. Okay. So next thing on the schedule, because of our time, is stages involved in tax audits. So after you have known how to document and keep proper records, then we now know our next item here is how to prepare for tax audit, right? How to prepare for tax audit. Now, I'm sure some of you that have joined my presentation before now, you'd have seen something like this before. Preparing for tax audit, generally, tax audit involves 3 stages. The first stage is pre-audit, right? The second stage is the audit, or let me say field audit itself. And then the third stage is the post-audit exercise. So, but I've tried to just summarize it in a practical approach in this place. So, number one is you will receive a notification from the FIRS or the LIRS or whoever the tax authority is. When you get notification, you are expected to, of course, verify the information that was sent to you, look at the letter, look at the date, what are the proposed dates that they want to commence your exercise, what are the documents they are requesting for on the audit letter, right? I would have shown a live sample of how the letter looks like, but for the purpose of time, I'm not going to be able to do that. So when you've gotten that document, you've reviewed it, and you are sure that this thing is for your company, the other thing to also look out for is that, is this audit period, hope it has not been audited before. For example, maybe the FIRS has done your company audits from 2016 to 2021. They now brought another letter and say, we want to do tax audit for 2020 to 2023. As an accountant of the company, as a tax consultant, or someone in charge of the company, you should be able to tell them and point you to them that, oh, sorry, you can't do 2020 and 2021 again because you have already audited it. That is how to preempt and then act, right, against those kind of presentations, those kind of practices that they do sometimes. If you are not aware of it, you are most likely to make a mistake and fall trap, right? Next is document gathering. Now, for the document gathering aspect is when you have reviewed the letter and you have seen that you can be able to meet up with all this information that they requested for, you now start gathering the documents and organize them in a folder. Organize them in a folder. So I would have, let me see if I can do a sample of how to organize them in a folder. Let me see. 1 minute. Okay, I think I need to share again. Admit. So let me just stop sharing. Oh, I've closed that. Okay, let me go back to that folder. Guys, please confirm once you can see my folder.
Can see your folder.
Okay, great. So under this, please just let's go to tax audit. So I've created a new folder again for tax audit. Click on FIRS tax audit. Let's say OGIRS to give us. So we have OGIRS tax audit. Some companies are very big. They have audits from almost all the states in Nigeria. So let's assume that we are doing FIRS tax audit. So under FIRS tax audit, click on it. Now they would have given you the letter. So let's assume that we have the letter. Letter will request us of certain documents. What I expect you to do is that, first of all, so let's do this. Do a tracker. People that register for this training might likely be able to get this tracker. So let's say you had FIRS audit, tax authority. I didn't plan to do this before, but I just thought to make it more practical, right? Authority. It won't take time, don't worry. Tax authority. FIRS. Tax period. 2021 to 2023.
We are not seeing anything.
Oh, really? Let me stop. Let me share entire screen. Thanks for that. Share. Okay. How about now?
Yes, we can.
Okay, great. So this is tax period, tax. So let's assume that this is an internal stuff. So documents requested, right? Availability. Now let me put it here as 2021, 2022, 2023. Right? Document requested. This one should be like serial number. SN. So let's say 1, 2, 3, 4, 5, 6, 7, 8, 7. Generally, they will ask for something like of course, your EFS, You can write it in full if you want. I don't have much time, so I'm just going to acronymize. How would I put it now? I'll put it as an acronym rather. So GL, TB. No, this one is not just TB. Put mapped TB, right? What else? Bank statement. We have after bank statement, they also ask for your CAFA in cases or evidence of purchase of PPE. We have VAT returns, WHT returns. Let's just say that these are the basic items that they will ask for. They will ask for other things, like let's say payee. So I can quickly do a box for saying that with the provided outstanding not available, right? So I can use what we call the data validation tool, right?
Sorry, please, can you share this tracker with us after the training? Sorry.
Yes, for people that register for this training will definitely get it. So
Thank you.
data validation, I'm just going to click on list, then click on item you want to list. So these 3 items. Now, okay. So I want to come here now. I want to say that for this part, click on admit. Let me admit everybody that is trying to join. Input list. Click on the source of item I want to list. Okay. So automatically when I come here and say drop down AFS, of course, provided, or let's say available. If I change it to available now, if I change, the option will change to available. So available, I can copy this. I can even put color if I want to. But since we are not doing Excel class today, we are focusing on this. So GL is available map. So bank statement, you can put it at outstanding. Let me see if I can put. I'm not sure if the color will show, but outstanding. I'm still going to put another, what's it called? Conditional formatting there to make the color show. But since that's not our focus, I can make conditional formatting to make. So just do all these things. This will help you to know whether you have provided information to the authorities or not, right? So let's say for VAT returns, outstanding, let's say this one, CAFA, most people will say they don't have, not available. You don't have to share this with the FRS or the tax authority. It's just for your own input, internal safeguard or internal record keeping, right? So we have a tracker already. We have a tracker for, so this is where you keep documents and track it. So now, after you have done this, you go to your folder, tax audit. So come here and say folder number 1, AFS. Folder number 2, GL. Folder number 3, TB or mapped TB. Folder number 4, bank statement. Like that, you keep folder. So you now drop, let's say you are doing 3 years audit now. You don't need to be creating AFS folder number 1, AFS folder number 2. No, just put all the 3 years, drop it here. Come back to your folder again, go to GL, drop all the 3 years. Make sure you have reconciled and everything is fine, right? And then that's how you attend to your tax audit document gathering process. Let me go back to my presentation now. Where am I? Yeah. So we are back here. Document gathering, that one has been fulfilled now. Now, if necessary, if you know that you don't have some documents that are important for the audit, you can ask for extension of time. That is, you can defer the audit that, please, we don't have all the documents readily available. In fact, maybe you are even doing statutory audit at the moment, or you are doing something else that is making everybody very busy. Maybe you are creating your budget for the FY. Ask for time from the tax authority, and they will usually grant it, except maybe you have delayed it unnecessarily before you ask for time. So now, pre-audit exercise. Taxpayer is invited for the audit, right? Of course, they invite you for the audit. They discuss the modalities of the audit. Do you want it to be virtual? Do you want it to be hybrid? Do you want us to come to your office and sit down for 1 week or 2 weeks? You discuss all those modalities, and then you achieve your pre-audit exercise. Then you have field audit exercise. This is when they come to your office. Of course, they come and review all your information. They can pick samples. Let's say you've given them a trial balance. They can pick a particular GL and say, we want to see this GL. when you've given them that GL, that can further say that they want to see the supporting document for the transaction you put into that GL. And that is where your SAP and some sophisticated ERPs, that is where they come into play. That is where you find them more useful, because if they ask you to bring them 2021 invoice that you paid to Babasuwe Nigeria Limited for transaction of so amount, and then you have paid like 200,000 transactions to Babasuwe Nigeria Limited in 2021, you now have to start looking for all the invoices one by one. But if you are using a sophisticated ERP system, just double click and go and open where it is, you show it to them, right? So those are part of the ways to make your work more efficient. Now, finally, when you have finished the audit, they create what we call the interim audit report that they share with you. The interim audit report is to tell you that, okay, there are some documents that you have not yet provided, or there are some places you need clarification on. Can you please provide them and clarify to us? After that, they share you the final audit report, which shows their findings. Okay, now we have sorted out everything, but this place shows that we are still owing us more tax. This one, we are not going to allow it. We want to disallow it. All those things. Then you now start having what we call the reconciliation meeting to resolve most of those issues. And when you have done that, everything goes on well. If not, then you guys can carry yourself to court. So, I'm tired, man. So, risk areas. What are the risk areas in tax audit? We have this area I've kind of put them together, right? I've been using this presentation style for a while, so I think most of the information here are kind of the same thing most times. We have reconciliation of revenue as per AFS, VAT returns, bank statements. So this is one of the pinpoint areas where FRS review revenue from different perspectives. They use your VAT and do work back of your VAT. They use your receivables and do work back of your receivables. They do your, what's it called? Bank statements. They just do many approach to just arrive at the same thing. And what are they looking for? They are looking for the highest way to tax you so that you can pay more tax. But anyways, that's why you need to have good, strong supporting documents in-house, and also a strong accountant to help you to position your company well for all these, lapses and possible areas that they can tax you necessarily. Also, we have provision and accruals, of course, in line with Section 27 of CETA. Provisions generally are disallowable expenses, right? But accruals, if you look at accruals, you need to be very careful. There is a thin line between provision and accrual. I was trying to explain it recently to somebody. When you provide for an expense, it's different from when you accrue for an expense. Providing for an expense means that you don't know the extent to which the amount you will incur, and also you don't know when that expense will become due. So it's not like an expense that is certain. It's just that you don't know what will happen. For example, you can provide for a legal case, right? That, okay, there is possibility that this thing will happen. But when you accrue for something, that means it has already happened, right? It has already happened, just that you have not yet paid for it, and then you are making that provision. So that is a different item. Even though people use it interchangeably, they are quite different. So for people that might need more clarification, I'll try to put a link to this file, this particular page on this slide, where you can go and read more about provision and accrual and how you can understand it better. So most times, accrual relates to balance sheet items, right? In most instances, and provision relates to P&L. So you might want to just identify what is the difference. Then we have confirmation of CAFA. So CAFA, we have CAFA certificate. We have whether your capital allowance has been utilized or not. We have situations of whether your exchange gain or loss is realized or unrealized. Where it is realized, of course, if it is a realized exchange income, right? And then if it's a realized exchange loss, the treatment. So realized exchange loss is disallowed, exchange income is exempt from income tax. So a lot of things like that. We also have whether the tax is due to FRS or LRS or whoever tax authorities. Those are part of the things that you should watch out for as a key area, because sometimes FRS will just say, oh, all your suppliers, you did not pay withholding tax on them. Then they slam 10% and 5%, as the case may be, on them. In most cases, you will discover that some of those transactions are with individuals, maybe even your audit fee. They will say you should come and pay withholding tax on it to them. Meanwhile, auditor might just be an individual, which is payable to the state. So all those key point areas, you need to watch out for them. Now, in conclusion, this is going to be my final slide, a case study that can enable, I think people are waiting to enter, right?
Sorry to cut this presentation slide after this.
What do you say?
Sir.
What do you say?
I said we'll appreciate you can kindly also email us the presentation slides.
Yes,
Apart from the video recording, sir.
absolutely. The organizers would take care of that, especially for the materials, right? As part of the people that registered, they will be able to get it.
Thank you very much.
Yeah, you're welcome.
Okay.
So now, case study. Interestingly, I put out this case study like 2 days ago on my LinkedIn, and I've seen a couple of people, right, a lot of engagement on it. So I would like somebody that has a very clear voice, very bold voice to help us to read this case study. I'm going to open the case study now. So anybody to volunteer for us? Anybody?
Okay, let me try.
Oh, fantastic.
Good afternoon.
Good afternoon. Okay, so let's go. All right, we are listening to you.
Okay, do I start from the background? Where do I start from? Where would
Okay,
you like
yes,
me
you can
to?
just start from this.
Okay. A review of the tax ruling in Dangote Industries Limited versus Federal Inland Revenue Services 2022. Lessons for taxpayers. Background. In 2017, the Federal Inland Revenue Service, FIRS, conducted a tax audit on the business of Dangote Industries Limited, the company, for the period between 2013 to 2015. Pursuant to the audit, it adjusted and recomputed the company's tax liabilities on the basis, amongst others, of the inclusion of costs and expenses which are not wholly, reasonably, exclusively, and necessarily incurred for the running of the business, and that the company did not fully remit the withholding tax, value added tax, and stamp duties on some qualifying transactions as at when due. In light of this readjustment, the FIRS issued a notice of assessment and requested the company to pay additional taxes in the sum of 10,982,876,078 naira. However, upon receipt of the notice of assessment, the company objected to the assessment on the grounds that the audit process did not follow the law. The law liabilities were still disputed, and that it intended to issue a more detailed letter of objection and additional documents. However, notwithstanding the company's objection and following several reconciliation meetings held, the FIRS issued its final notice of refusal to amend NORA, and on that basis, the appellant filed an appeal at the Tax Appeal Tribunal. Determination of the issues. The first issue which arose relates to the question of whether the FIRS breached the company's right to fair hearing when it issued a revised amendment simultaneously with a NORA without giving the company an opportunity to object. In resolving this issue, the TAT noted that in the instant case, the company had been invited and attended several reconciliation meetings and was given ample opportunity to present its case and resolve all issues. It noted that the requirement for fair hearing is ordinarily satisfied where a party is given a fair opportunity to present its case and have it resolved. It further held that once a party has been afforded the opportunity to present its case and he fails to take advantage of it, he cannot be heard to complain that his right to fair hearing has been breached. Furthermore, the company also contended that the FIRS acted illegally and unlawfully in assessing the company to tax in the said sum for CIT, WHT, and tax. In response, the FIRS noted that it gave the appellant ample opportunities to present documents to support its claim, but it failed to provide any documents until the appeal was filed, and even during the pendency of the appeal before the tribunal. As such, the FRS concluded that the documents were either unavailable or the company was unwilling to make them public. It reiterated that it had the power to assess a company as many times as possible, in line with the provisions of the Companies Income Tax Act. On this point, the TAT noted that pursuant to the provisions of the CETA, the FRS is empowered to call for or give notice to any person to complete and deliver any returns and relevant information as many times as possible for the purpose of obtaining full information with respect to the profits of a company within the time specified by the notice to a person. It also noted that in the instant case, the FRS gave the company ample time and opportunity to substantiate its objections with verifiable documents. However, the company failed to provide any verifiable documents. It noted that the FRS cannot consider documents or ascribe any value to documents it cannot see. The TAT relied on the decision of the Supreme Court in Abubakar versus Waziri and Ors, 2008, where it was held that where a party leads evidence as to the existence of a document in proof of his case, the document must be tendered. The tribunal therefore held that the company failed to provide critical and relevant documents required to substantiate its claims to the FRS. In addition, the company noted that the FRS charged VAT on reimbursable expenses such as salaries, rents, and bank charges made by the company on behalf of its subsidiaries and vendors. Agreeing with the company, the TAT ruled that VAT should not apply on the reimbursement of costs such as salaries, rents, and bank charges paid by the company on behalf of subsidiaries. Another significant issue which arose in the determination of this appeal was with regards to the provision of Section 19 of the CETA on the question of whether the company's pioneer profits and franked investment income for the relevant years were liable to excess dividend tax. A review of Section 19 of the CETA is to the effect that where dividend paid out by a company in a year of assessment exceeds its total profits or taxable profit for the year, then the dividend paid out will be regarded as the total profits and taxed accordingly. The tribunal noted that generally, the source of the profits out of which the dividend is paid is not relevant as long as the dividend exceeds the taxable profits of the company and would only amount to double taxation if the same income is taxed more than once in the hand of the same taxpayer. In reaching its decision, the TAT referred to the provision of Section 81 of the CETA, which establishes that where a dividend becomes due from or payable by a Nigerian company to any company or person to whom the Personal Income Tax Act applies, the company paying such dividend has an obligation to deduct a 10% tax and pay same to the FRS. However, Section 83 of the CETA provides that dividend received after deduction of tax stipulated in Section 81 is to be regarded as franked investment company of the company receiving the dividend and is exempt from further tax as part of the profit of the receiving company. The tribunal also referred to the provisions of Section 14 of the Industrial Development Income Tax Act, which exempts profit from the income tax of pioneer companies. In light of the above provisions, the tribunal was of the view that the franked investment income and pioneer profits of the company were exempt from additional tax. The tribunal, however, noted that prior to and pending the appeal, the company failed to provide any documents, despite clear requests by the FIRS, to substantiate its claim that it had pioneer profits and franked investment income, which the FIRS failed to consider. The tribunal's decision. On the basis of the above, the tribunal ruled that the company must provide all requested documents within 2 weeks from the date of ruling to enable the FIRS review and make the necessary adjustments to the assessment in contention. It further directed that where the company fails to provide said documents, the assessment will be deemed final and conclusive.
Thank you very much. So let me allow you to read the lessons. Since you've been reading two things, I know you must be tired. Let's allow somebody, just one person to pick. Lessons for taxpayer. I really love your voice. Or do you want to continue? Or somebody wants to, who else wants to volunteer?
I'll volunteer.
I will.
Okay. Okay. So anybody can just go, please.
Okay. Lessons for taxpayer. From the above review, it is clear that a few notable points are worthy of note by taxpayers in order to avoid some of the pitfalls of the complaint in this appeal. The following points are worth noting. 1, it is a must to have complete documentation of transactions and at all times have access and ability to retrieve relevant source documents, contract documents, and payment documents. Relevant tax authorities to substantiate the validity of a transaction considered to have passed the WREN test. 2, a taxpayer must ensure the full disclosure of all and any information and documents that it deemed important to substantiate any of its claim or objection to an assessment by the FIRS. 3, the FIRS cannot charge VAT on a reversible cost, provided it is truly a reversible cost. However, note that consumers of tradition supplies for cross-border transactions in Nigeria, where no tax is charged, now have an obligation to self-account for the VAT pursuant to the amendment to the VAT Act by the provision of Section 37 of the Finance Act 2019. 4, the tax ruling on excess dividend tax complies with the amendment contained in the Finance Act 2019, which clearly exempts frank investment income and pioneer profits from excess dividend tax. In conclusion, these points must be noted by taxpayers in order to avoid the errors made by the company in this appeal.
Fantastic.
Disclaimer. Okay.
Thank you very much. Thank you very much. I'm sure that many people were like, when will they finish reading this thing? But trust me, let me allow maybe 2-3 people to just contribute what they've learned from this case that we just read. What are your thoughts? What are your perspectives? Especially for people that have read it before. Let me allow, if you want to talk, just raise up your hands so that we can be more engaging, and this will be the final slides actually. So let's just talk. What are our perspectives about this case? Thank you very much to those 2 people that read. That was very fantastic. The first speaker was so eloquent. Maybe you should be working with them. You should inside us with newspapers. I heard newspapers, news, television, and all those things. You have a very, very good voice, and I really love that. Second person too was very on point. So let me allow people to ask questions. What are your thoughts? Let's know about this case that we just read. I don't know why I'm not used to Zoom again, so I'm trying to understand people that are raising their hand. Now I can see them. How can I see these participants? Somebody should help me. I cannot see participants. Okay, I think I can see it now. I think I must have clicked on something. So, okay, Olayinka Williams, go ahead, please. We have just a few minutes more to wrap up this score. Olayinka Williams, you want to say something? Okay, so in the absence of no contribution, I'll just go back to the final presentation. I'm sure that we've learned 1 or 2 things from that case study we've talked about. So how to prepare for and handle tax audit. These are just the conclusion. This is the summary of everything we've done so far. This is not supposed to be the heading. I think I must have made a mistake here. This is supposed to be the summary and conclusion of the entire presentation. So, and what I'm saying here is that, number one, importance of efficient. So these are the things we've covered so far. We've understand the importance of efficient record keeping, the benefits of organized documentation, which we also demonstrated how to save files in different folders. I'm sure some of us learned that. I can even do it again, maybe one more time before we go. Preparation of how to prepare for potential tax audits, continuous improvement in your practices and processes that you have in place, the utilization of available resources. That is, for example, this tracker I've done now is for everybody on the call. You can make sure to use it. You can also leverage the folder saving. For when I was with EY in Nigeria, most of my associates, I kind of have a session on how to save document properly for different clients, especially if you are managing multiple clients. You need to be able to save it properly so that when the client calls you, I say, hello, Richard, can you get me my VAT returns for February 2024? I don't even need to start saying, where did I save it? I know where it is saved instantly, right? And then also to encourage you to also take action. That will be the end of this presentation. Thank you very much. So let me just quickly run through that presentation, the folder again, one more time for people that I know some people just joined. So let me see, sorry. Okay, good. Yeah, so this is the folder. Let us know that this is the folder. We have a CGT folder, like I said. You create a folder for each of the taxes. Let's assume that you are looking for your CIT returns for 2023. So you have to go to this place, 2023 YOA. Then you see of course, we'd have saved the documents there. And then for 2024, same thing. Let's assume you are looking for VAT returns for March 2024. So go to VAT folder, go to 2024, then go to March 2024. You see it saved there. So like that for others too, if you're looking for your payee returns. So you create a folder. So first step is to create a general folder for tax. Second step is to create a folder for different types of tax. The next step is to create a folder for what specific months, right? So for a tax audit now, I said tax audit, we have this FIRS tax audit, we have OGIRS in this case. For FIRS, we have AFS, GL, this. So even that document we did, I can save it and say, let me copy the link. More options. I can do browse, put it here, and then save it as tax audit. Okay, so you can see it here. Then we are good to go. So I think with this few points of mine, I've been able to convince and not confuse you. All right, so thank you very much, everyone. I think that's the end of the presentation for today. We'll enable question and answers now so that we can call it a day.
Thank you very much, Richard. Thank you very much. That's fascinating. So now we're moving to question and answer regarding to this topic, right? So if anybody have any question regarding to this topic that we discuss today, efficient tax record keeping and documentation, from what I said and also from what my colleague Richard Okonola said. I don't know if anybody in this meeting have.
Okay, please, I have a question.
So please, before you go ahead, please. So we have a few minutes for question and answer. But I think there is someone in comment section. Hi, Richard. Can you hear me, Richard?
Yes, I can hear you.
There's someone in comment section. She wants to know. She said her name is VO. What was the final outcome of this case? I mean, the case of Dangote and FRS. So can you just quickly, in 1 minute, can you just quickly tell her the final outcome of that case? Then we move ahead to question and answer. That's probably just for 10 minutes, please.
Okay. So I'll just give the person assignment. Go and do research on the final outcome of the case. So go and do research. But let me tell you something. So most times, if you look at one of the comments, let me please share my screen here.
Okay.
So that maybe the person might have seen that comment too. 1 minute, just 1 minute. Let me see this. Look at this comment from, this is my guy from Deloitte. Okay, yeah. Can you see this? What do you say?
Very apt. The problem with relying on decided cases is that many times we don't get to know whether or when such cases are appealed.
So in most instances, it's only when the thing is paining the client that they will come and push it out. They will go to court. When the court now says otherwise, maybe in favor of the FIRS or in favor of the client, sometimes if it's in favor of the client, they will publish it everywhere. We win this case. But if it's in favor of the FIRS, everything just go down. The client will just silently go and pay. So in this case, right, they did not, there might be further information around it, right? But I don't think those information were made public. And in some instances, they settle out of court. When the court has said, if you cannot provide it in 2 weeks' time, make sure then the FIRS have the right to tax you. Then maybe they know that in 2 weeks' time, even in 1 year time, they cannot provide that document. They just go and meet the FIRS. Yeah, how will you help us now? You understand? So that's what happened most of the time. And then they end up closing the case, right? So, but for you to have a proper, deeper understanding, I would encourage you to do more research about that case and see whether you can get any other information on it. And I'll be happy if you can write on it also. Tag me on LinkedIn and then we share it for everybody to also read. Right?
Okay, thank you very much, Richard. So to buttress what Richard just said now is all I have to say regarding the case Richard shared earlier. If you are very, very, very sound, I mean, if you know what you are doing as a financial accountant or as a tax consultant or as a tax specialist, right? Most times when FIRS come with a huge tax liability, right? The best thing you can do for yourself is just to like remain calm and then make sure that the document they came to audit or to audited is very, very intact, and then know what you are meant to do in terms of each point they stated out in in their own feedback, right? Because sometimes they come with a huge tax liability and then they assume that the tax consultant or the tax specialist for a particular client does not know what he is doing. But in most times when you know what you are doing, right, trust me, if you are very familiar with the tax laws, if you are very familiar with IFRS, which is called International Financial Reporting Standard, right? Trust me, you are going to win most of these cases. That's just a huge case, right? So sometimes you don't have case that is huge as that, right? So that's that in that regard. So I don't know if anybody in this webinar have question and answer, right? So me and Richard will take our time to respond to your question. We only have 10 minutes for.
Good afternoon, sir.
So, hello, sir. We only have 10 minutes for the question and answer because I don't want to waste much time now. So after the question and answer,
okay, I'll be very brief. I just want to know whether you can share with us a template of a tax plan, things like tax plan, then tax avoidance strategies. Those two as well as a tax calendar or compliance, comprehensive compliance calendar. Those three important templates would be highly appreciated. Thank you.
Richard. Hello, Richard. Are you there?
Yes. So I don't want us to give we don't want to give you everything for free, right? But what I can do for you is that go to LinkedIn, right? Search for one of my colleagues, Adedayo Adebisi, right? He posts tax calendar for every month. Tax calendar for the month. Adedayo Adebisi, that is his name. Check him on LinkedIn. So you can easily copy his template that he has posted. He talks about pay, pension, all those things, all the types that you pay in the month. Everything is there, right? So that one answers that question. For tracking, that one is your own internal tool. I'm going to share this tax tracker for tax audits now. Not all documentation have the same processes in all audits. So this one is just a guide, right? But for your internal processes, you still need to have something internally that you'll be using. So in those parts that you need, the one that is tailored to your organization, it will require you to pay for it. You might not be able to get those ones for free. And that is why we have Emmviron, we have OOA Consulting on this call also to guide us. So if you need any consultancy services to help you streamline your processes, to put things in place, to organize your system, of course, feel free to shoot us and then we'll be willing to help you to organize them. But that does not mean to say we can't give you some more practical tips, but trust me, sometimes these things come with financial, we're not in business to do free work, you understand? All right, thank you very much.
All right, thank you, Richard.
Okay.
So, there's a question.
Okay. I also have a question.
I'm just sorry, Mr. Shijuade, before you go ahead, there's a question in the comment section. I'll just quickly like to respond to that question.
It's all right, sir.
Does holding a company owing tax remove the whole tax liability? So the answer to that is no, right? So if you own a company, right, and at the end of the day, probably your company got liquidated, or probably at the end of the day, your company ceased business, or probably your company folded up, right? So, and you have a huge tax liability on ground, that does not mean your tax liability will be erased. It doesn't work like that, right? Because at the end of the day, you need to like pay your tax liability. You might not pay when the company fold up, right? But when the FRS observe or notice that, oh, this particular taxpayer has a huge tax liability, I want to believe there is a way they can as well, that there's a system they can put in place to make sure they what's it called, the business owner pay this tax liability. So if you have a company and your company is owing a huge tax liability and your company liquidates at the end of the day, you're meant to still pay tax. I hope that answers your question, Stephen, Mary, about
Yes.
no, correct. So you can go ahead, Sijuade.
Okay, so I have 2 questions, but very quickly. First one is that if a company just got incorporated and you have started the business, but you don't have bank accounts.
Okay.
For so how do you advise? What do you advise the company to do so that there won't be issue maybe when there is tax audit? Or then secondly, how can we get the recordings of this? Is it possible that you send it to us? All right.
So the first question is if a company got incorporated, right, and then the company does not have bank statements, right? So if I'm correct, for tax purposes, are you saying what are the things that the company is meant to do regarding tax audits? Is that correct?
What would be the implication since you don't have a bank statement that is in the name of the company you just set up?
Okay, so so this is how it works. If you incorporate your company or incorporated your company, right? What the tax law says is you are meant to as well register that company with any tax authority, right? So that is immediately after you got incorporated with Corporate Affairs Commission, right? You are meant to also as well register with a tax authority. So in the case where you do not register with tax authority, right, and eventually at the end of the day, you go register with tax authority, right, and you have already commenced operation. So there is a penalty to that registration if you do not, because you do not register on time, right? So if they then want to come and tax audit the company, right, definitely they will tax audit the company when the company commenced business. I hope that answers our question. Hello, Mr. Shijuade.
Yes, please. I was trying to unmute. Yes, it answered.
Right. So then the second thing is I'm definitely going to share the slides to all the participants.
Hello, sir. Can you briefly, the other 2 questions, the other time, you forgot to include them in your response. That is, what do you understand by tax planning? And then what are tax avoidance strategies? In case we are asked by a company during a meeting. Thank you, sir.
Are you saying what is tax planning, right? And then the strategy you can put in place to avoid
tax plan. Yeah.
Okay, so
exactly.
Back to your question, right? So what it simply means, it involves the strategic analysis and arrangement of a taxpayer's financial situation to optimize tax efficiency. So for tax planning now, it is very, very important for a company to put a good tax plan in place, because the goal they're trying to achieve is to ensure tax liability is minimized, right, while remaining compliant with all legal requirements, right? So tax planning applies to individuals, it applies to businesses and organizations. So your main focus, right, is to like, you want to minimize deductions. I mean, your main focus should be on deductions, exceptions, credit and various and financial strategies. So it's very, very important because you are as well putting what we call income timing, what's it called, entity selection, and then a good planning can as well help you in terms of what we call tax compliance, right? So let's say, for example, now you are meant to like file your returns at the end of the month to FIRS, right? And the value is about 2 million naira, and you don't have a good tax planning in place. There's no how you're going to pay that 2 million naira at the end of the month, because it's as well strengthening your internal control if you put a good tax planning in place. What's the second question again, please?
What are tax avoidance strategies that a corporate company can put in place?
Do you want to avoid tax?
Since it's tax evasion that is illegitimate, but tax avoidance is legal.
Okay, all right. So you don't mind me. I have my reason to ask that question. Yeah. So so tax avoidance strategies are actually legal, right? And like you said, so it is the opposite that is illegal. So that is used by individuals and businesses to minimize their tax liability, right? So the strategies actually it's advantage of loopholes, right? For your deductions, exemptions within for taxation now, right? So it as well allows taxpayers to reduce their tax burden while staying within the law, right? So one of the strategies you can as well put in place is making use of what we call good tax planning, like we said earlier, right? And making use of what we call maximizing your tax deductions, right? Your business expenses, right? So because you can as well for tax what's it called now? For tax, sorry please. For tax planning, right? That can as well help you to make sure you can put a good thing in place. So I will also allow Richard to buttress my point.
All right, thank you very much for that. So you guys, you're wondering that this person does not want to go straight to the point, right? That's because our speaker has worked from the perspective of FIRS, that is being a tax authority and also being a consultant. So on public space like this, it's always quite difficult to provide specific tax avoidance schemes, right? As much as it is legal, right? Don't forget that our goal as tax authority or as taxpayer is to help you pay the right tax, and not whether the lower tax or higher tax, but the right tax. So when you are talking about tax avoidance schemes, they are just strategies that you put in place to ensure that you are not exposed to taxes in multiple phases. For example, you can have instances of, say, acquisition of your PPE, right? So you might want to look at the timing of acquisition. When you acquire a PPE, or let's say, okay, let me give you another instance. Let's look at timing of claiming your CIT, claiming your deductible, claiming capital allowance. Let's assume that your company is already below, your company made a loss, right? Whether you like it or not, minimum tax is applicable. So you now want to look at how you can do it such that you are not reducing your taxes, don't forget, but you don't want to also waste your minimum, your what's it called? I'm trying to remember now. You don't want to waste your capital allowance. Let me give you a practical scenario. For companies into manufacturing, right? Agriculture, steel manufacturing, they are allowed to charge 100% capital allowance. That is, they can utilize 100% of their capital allowance, as compared to trading companies that can only utilize 2/3 of their capital allowance, right? So if a company that is already in manufacturing line, they made a loss. But when you make a loss, automatically if you have already exceeded your 4 years of tax, what's it called? If you have exceeded your 4 years of minimum tax exemption, in the 5th year, you are requested, you are liable to pay the minimum tax at the rate of 0.5%, right? Now, that minimum tax, whether you claim your what's it called? Whether you claim your capital allowance or not, the minimum tax is what you will pay. However, because of people do not know some of the law, how the law stated it, the law says that let me give you a very practical example. The law says that you can charge at least, or let me, is it at least? Yes, at least, or the maximum you can charge is maximum of 2/3 of your, that's what the law says. 2/3 of your capital allowance is what you can enjoy on taxable profit, so that you can now arrive at your final taxable profit. That is 2/3 of your accessible profit less your accessible profit gives you your taxable profit. Now you can actually charge lower than that amount. Where, so let me give you, let's make it more practical. Let me see if I can share my screen. Just 1 minute. I'm not giving you, I'm not even sharing my screen again. Anybody that wants to understand should understand. But what I'm practically saying is that let's assume that you're supposed to pay, when you have done your accessible profit is 100 million, right? And you have capital allowance of 100 million. Automatically, if you are a trading business, you are expected to charge 2/3 of your accessible profit as capital allowance. Let's assume that you have that capital allowance volume. So if you charge 2/3 of it, that means you will only be paying CIT on maybe 20-something million, which is your accessible profit minus capital allowance. You're paying CIT on 20-something million. However, when you have already made loss, that means you have your full capital allowance there to be claimed, right? But part of the requirement of the law, what many people do not know, is that they still go ahead to charge the minimum tax. And by so reducing, different calculations apply. This is more practical. It's when you see it that you understand that you can usually use tax planning, which not necessarily avoidance strategy, but tax planning strategy to legally minimize your tax exposure. So the law says that you can use minimum, or let me say maximum for trading company, 2/3, maximum of 100% for manufacturing company. So that one is one. Another one is under, let's say for example, pension. Pension Reform Act says that minimum of BHT, that is basic housing transport, minimum of BHT is what is allowed as pension. Some companies will go ahead and say they want to use gross income, right? They say they want to use they want to do your pension on your gross income. That means they just do 8% of your gross income. It is allowed because the law did not say BHT. The law only says minimum of BHT. Now, when they use 8% of your gross income, you are likely to pay lesser tax. But the company on their own end will be like, if you are giving this guy lesser tax, who will be paying more pension for the employee. So somehow you have to find a way to create balance, right? So let's just kind of understand that some of these strategies, they are not just cast in stone. You have to understand the system first, then you can now address it strategically. So, and then for the fact that we cannot give you specific, because some of those things are not, they are legal, but they are not something you just give online, because some people are going to apply it wrongly and they'll say you give them the advice. So that's why we cannot exactly give you 100%.
Thank you, Richard. Thank you very much. So I will respond to the last two questions that we have in comment section. So the Muyiwa said, is the processing of CAFA so significant in granting capital allowance by the FRS? So this is how it works, right? If I have a company, right, and I have a qualified capital expenditure, right, so definitely I'm going to have my capital allowance on this qualified capital expenditure, right? So, because whatever you are doing with FRS is called self-assessment, right? It is called self-assessment. So it is important for you to get CAFA for your what's it called, for your qualifying capital expenditure. What I mean by that is fixed assets, right? Your PPEs, plants, property, equipment, right? So, and then if FRS now come and say, well, we want to come and audit you, right? And you're unable to provide this CAFA, this certificate, that means all the capital allowance you claim in your, what's it called now, in your tax computation, or probably doing your filing of your returns for your company, they will then add it back. I mean, it won't be used, right? So because you didn't provide CAFA for these what's it called now, for these qualifying capital expenditure. So it is very, very important, right? If you own a business, probably you own a conglomerate, or you work in a particular organization, and then you claim capital allowance, do you have CAFA for that qualified expenditure that you claim capital allowance on? Because if you claim the capital allowance and you file your returns and then they come for audit, because CAFA is part of the document they request from you anytime they come for tax audits, right? So the second question is, does FRS have the right to query my accounts when I present it for filing in order to obtain tax clearance certificates? Okay, I will respond to that, and Richard will then respond to, I think we have two questions in this. Okay, wait, does FRS have the right to query my account when I present it for filing in order to obtain TCC? Yes. So, so we have the kind of system they put in place. We have what we call DEX review, and we have what we call tax audit, right? So DEX review is actually what FRS normally does in their office, right? They don't do it outside their office, they do it in their office. I mean, DEX review. So if, for example, now you file your account, right? Let's say, for example, you filed the account for, you have already filed account for 2023, right? And you want to obtain your tax clearance, right? Definitely, they will review the account you have filed. However, you can as well generate a tax clearance certificate on Tax Pro Max. That is if there is no, what's it called? You don't have any tax due, but if you have any tax due on Tax Pro Max, definitely you won't be able to generate tax clearance. But if you have a tax due, probably you haven't filed your returns, then you can't generate what we call tax clearance certificate. On the other hand, they carry out a lot of review, desk review, to see, okay, this particular taxpayer has been complying for the past 2, 3, 4 years before we can as well generate or probably give this taxpayer tax clearance certificate. So it is called desk review. It is not necessary for them to come to your office and say, oh, we want to come and do tax audit in your office, right? They can as well sit down in their office, sit back in their office and say, oh, let us carry out a desk review for this particular company. So that desk review, they might probably write you a letter, right? And say, oh, can you provide us this document, this document? So if you can provide it for them, they will do that desk review. If you have a tax liability to pay, they will let you know. If you don't have a tax liability to pay, they will then give you the tax clearance certificate. But now, the way it works now is you do not need to stress yourself anymore. If you do not have any tax due, right, and you know that you don't have any tax liability, you can just go on Tax Pro Max, right, and then generate the tax clearance yourself. That is if you do not have any tax due or taxes due. So this happened when I filed for 2023 FY account. They refused issuing TCC and requested I substantiate my VAT remitted and also cost of sales, as well as providing receipt for some admin expenses. I thought they can only do this check during tax audit exercise. No, like I said earlier, we have the system they put in place, desk review, right, and tax audit. So what tax audit simply means is they do it outside their office. They go to the taxpayer office, right, or offices and say, oh, we want to come and tax audit your company at your office location, right? What desk review is, oh, we are sitting back in our office. We are going to serve you a letter, provide this document for us, right? We carry out a review on all these documents and then confirm if what you have filed is right or wrong. I hope you understand, because sometimes finance guys does not know that FRS carry out desk review in their office. They think, oh, most times they need to come to their office and come and do tax audits. No, desk review and tax audit is a two different things. Richard, do you want to buttress my point on that?
No, I think you've already answered it sophisticatedly, so I don't think we have any problem again.
All right.
Good evening.
So that's okay. We'll take that for the last question, please. Go ahead. That's our last question. Go ahead, please.
Yeah, good evening. I actually put my question there, but I don't think it was right. So I want to just say something about two things. Just one on what you just said. That desk review, most of the time they will insist that they want to spend 1 or 2 days, 3 days with you. Yeah. And of course, you still want to be have a kind of cordial relationship with them. You allow them to come, even though what they will do, it will be like something for the high level. They will come up with their best judgment, especially for the tax monitoring for VAT and tax. Just a comment. But the question I have is on, we're in the era of digital now, and I put that question there. The VAT and with all this tax can be managed via the ERP, like you mentioned, SAP. But for the CIT aspect, I think it's done outside the ERP. And for now, it is, I don't know whether there is any digital applications that company can use to do that assessment. You know, it's a complex one. You need to do the data, you need to do a lot, you need to consider a number of things, what is allowable, what is not allowable before you do your tax assessment. So I don't know whether there is kind of applications that is in vogue or that is available that employer other than using the Excel to do it. Thank you.
All right, so I will allow Richard to answer this question, but before I let Richard to answer this question, right? I want to say something to you, Mr. Rashid. So when it comes to I did tell people, right? We need to understand that software is garbage in, garbage out. Do you know that, right? So as a finance person and tax professional, right? I do not I don't want to say most times, right? I mean, software is good, right? Don't get me wrong, but do not allow software to as well calculate everything for you. Do you get what I'm saying? Let's say, for example, now, right? You have a software that you use in your company. Let's say you use Sage, and then you are meant to carry out a particular entry, right? And if you render a service to your customer, right, you are meant to debit account receivables, right? Or you debit debtors account and then credit revenue, right? So if you do not know this, right, you just garbage in, garbage out, right? This is not a bad thing to know how to use the software, right? But at the same time, as a finance person, I do encourage people to, okay, yeah, I need to know what I want to use the software for. For task computations now, you know, you have a lot of long pro forma when you want to do your task computation, your, what's it called? Your hard backs, your depreciation, your assessable profits, your capital allowance claim, loss relief, blah, 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 a long list of pro forma, right? So you need to know this as an individual, as a finance person, right? Before you can then say, oh, what kind of software can I use to calculate these things? Because you do not leave everything to your software alone. This is just my own advice. You can as well say, oh, yeah, I don't want to know. I just want the software to calculate everything for me. But at the end of the day, you should understand that software, all these softwares are just garbage in, garbage out. But Richard, can you please attend to the question, please?
Yes, unfortunately, I did not get the question very well. So the first question,
I mean, it's asking about the tax. I mean, the software you can use to calculate tax.
Let me put some insights. You know, every month as finance or when you are working with a corporation company, you need to book your taxes every month, even ahead of you, before you do it, before you close the year, and you need to, you know, file your tax return as well. But these are always been a rule of thumb or something that you have to, you know, use an Excel to do the computation every month before you do your finance. Even when you want to do your unaudited financial statement for the quarterly, the one you have to report to the NGS, you still need to do some form of assessment such that when you are doing the full year your tax operations, you are not going to be, you know, want to have under assess your tax in the course of the year. But however, if you have a kind of tool that, for instance, the VAT and withholding tax, it is perfect with SAP because, for instance, I use it. You just need to set it there. All your invoices, they just deduct appropriate taxes for you. But for the CIT, which has to be done, the assessment need to be done outside the ERP you use. If you have a tool, of course, you have to have the knowledge of tax, garbage in, garbage out.
Exactly.
To achieve your objective. But if you have a tool, it will make your job to be done faster. That is the point I'm making. So, because these days, you can see the way organizations are going. In those days, you may have a tax department when you have many people that are there. But now some don't even have a position for you. You have to contract it, and some have one person doing it. So you will need that person will need the kind of support system that will enable them to function well. And if you have a tool, I believe there should be, but I'm not aware of any. That is why I'm asking the question. If you guys are aware of any, or we can also do, then we can have a discussion thereafter. Thank you.
Okay, yeah, definitely there are tools. So somehow because I'm in the UK, so there's possibility that some of the softwares that I know might not be exactly available in Nigeria. So, but I know of a software called Digita, Digita. Digita. I might be able to get more. I will send it across to you. But that software allows you to upload only your trial balance, and you'll be able to produce your CIT from it.
Exactly. Thank you. Please share.
All right. So,
Okay, so
I will let you know.
Mr. Rashid, I know you're happy to hear that. So to buttress what Richard have said, right? So to make it easier for you, so if you want to prepare a task computation, it's very, very easy. The two things you need to prepare a task computation is just your what's it called now? Income statement, right? And then probably your income statement, and then your fixed asset schedule in your audited financial statement. If you have these two elements, I'm sure you are good to go for your task computation. Even if you have a large volume of data in your AFS, right? Once you have your income statement, right, and then you have your fixed assets schedule, in your audited financial statement, you can prepare your task computation using spreadsheet or Excel. But that Digita can as well help you too. But I'm just saying this for knowledge sake. If probably in future you want to prepare your task computation. Who else have any questions, please? Is that all?
Please, can you help us with a company? The new Nigerian Finance Act, so that we'll be on the same page with
so
the latest
to get
Finance
the Finance Act, right? I think let me just check Finance Act
and the practical applications.
Practical application. No problem. We have different training that are coming up, and they are very affordable trainings. So what we can do is that we will send you the training slides, right? You can just enroll for any of the training. But if it's just material which are such as the Finance Act 2023, right? You can easily go to let me see. I want to remember this website that they post it. Finance Act 2023 Nigeria. So it is posted on the Budget Office of the Federation. Budget Office of the Federation. Go to their website, you see all the finances from 2019 till date. Also, is available on FIRS website. Under FIRS website, go to, I think, documents or something. Let me just check that also. For this Bureau of Office of the Federation, I'm going to drop the link so we can easily check it right now. Then let me see for FIRS own. FIRS. So I've dropped FIRS link also. But if you want practical application or trainings, right, of course, you can easily provide that to you also.
Hi, can you hear me?
Hi, good evening.
I can hear you.
Good afternoon. So my question is regarding documentation. So I work with a small tax firm. So most of my clients are SMEs. I know most of the SMEs they don't even know how the process is set for individual. So I noticed that one of the issues that I have is for them to provide source document or supplies. So and most of the time, by the time they provide time to file is already done. So I just want to ask, is there any advice you can give to me in requesting for source document to have a solid evidence in case there's any tax?
Mr. Habib, I will allow Richard to answer that question, but I didn't get the question very well. Richard.
Okay.
Yeah, I didn't get it also. Maybe you can rephrase it.
So what I'm saying is that most of the time, if I request documents like source documents to serve as an evidence for any transaction, when you're dealing with SME, they are reluctant to provide those documents. Probably they spend some things on their own personal expenses, which is not even relating to the company, but still they are reluctant to provide till the time to file the tax, maybe when EY return is due. So I'm just asking, maybe there's any advice or any should I say tactic that I used to.
Okay, I think I get you now. So some companies, they've incurred expense, maybe because the expense is not exactly legal, not like it's illegal expense, but maybe they use the money for MD, maybe the money is bribe or PR, or they can't even find the supporting document for that expense, right? So we are now asking that, is there any tactics that we can use as a consultant to manage that kind of exposure, right?
Yes, exactly.
Okay, fantastic. So for those kind of expenses, what I would just advise you to do is that check, can you trace them to the bank statement? Of course, most times they will have incomplete record. So if you can trace to the bank statement, look at who they paid it to. If you have to use what many people call it based of judgment, but of course it's personal discretion. Just look at it. This expense, maybe it's 3,000 naira. If they are not significant and they are not so much, you can easily treat them as, of course, reimbursable, what's it called? Office expenses or the smaller expenses, sundry expenses. However, if they are significant, you need to disallow it and tax it. When the business owner sees that the tax is going to pay is high because he cannot provide supporting documents, nobody will tell him to go and look for the document and provide to you. So you need to be very firm as a consultant. As much as you are siding your company, you don't want a situation where you have done the computation, everything is perfect, looks good. They filed their returns, they've paid taxes. Then FRS now come for tax audit, and the client is now cursing you, or client is saying that you did rubbish work for them. You don't want to be in that position. So, like I usually say, as consultant, your job is to help the client pay the right tax, not high or lower tax, but the right tax. So as much as possible, put yourself in the position of FIRS. If they were the one looking at it, what would they have done? Right? If they would have disallowed that expenses. Of course, disallow it because the company says they paid money to police to help them to watch their office. Okay, look at it. Is it reasonable? Does it pass the rent test? Why are they paying police? Okay, they said they pay it to guide them from Omonile. Some people, they give you different kind of excuses. Or they said they paid this to collect their car from VIO because they violated all those kind of expenses. If they've been able to explain what it is for you, treat it accordingly, disallow where necessary and allow where necessary. But if they don't provide supporting document, tell them that it is assumed that that transaction never occurred, unless it is significant and you can trace to the bank statement. Then of course that one is good to go. So you have to use a lot of discretion, and whatever you are doing, like you mentioned, you're a small consultancy practice, it's a small company. Whatever you are doing, please try to document it, because you have a lot of cases like that. So try to document it in a note. When you are sending the FS or task computation to the client, send it alongside with the document. Put it commentary on account preparation. So send it along so that when in next future, 3 years, 4 years time, even at Big Four, we do the same thing for clients. We put it tax commentary notes so that in the future, when anything arises, when we told the client, we give us this document, said they don't have it. Okay, we will allow it because you said it's a legal expense. But in case of future events, you have the right and responsibility to provide it to the FRS if they request for it. That way you have exonerated yourself. Right? So I hope that answers the question somehow, but that will be the last question. We are not taking any more questions for
Thank you very much for that.
Thank you very much. So I'm going to hand over to the host back so that we can conclude this session now. We've gone beyond our timing.
Thank you very much, Richard, and thank you to everyone that is in this meeting today. We want to really appreciate you for creating this time to join this webinar, and also, like Emmanuel said before we started the webinar, this webinar is packaged by OOA Consulting and Emmviron. So what we do at OOA Consulting is we're a consulting firm. We do accounting, tax, and then audits for different clients in different industries. Our website is on the comment section. You can as well visit our website and see what we do, right? So thank you very much, everyone. So for the slides and all the materials we use for this webinar, we will be sending it to all the participants in this meeting. So thank you and thank you and thank you. So this is the end of the meeting. Thank you very much. Thank you.
Thank you very much. You are blessed.